Hey guys, welcome back to the channel. In this video, I'm going to be talking about why you should start investing as early as possible. And I'm going to give you kind of my own insights and what I did to get where I am today. All right. So I'm getting over a cold, so I apologize if I sound kind of stuffy. All right. Just been dealing with this cold for probably the last like 5-6 days. I'm pretty much over it now. And I'm just getting over the cough. So I apologize if I cough later on in this video. But I wanted to talk about why you need to start investing as early as possible, right? For those of you who don't know, I'm out here in Thailand. I quit my job earlier this year, and now I'm a full-time content creator living out here in Thailand. All right. But it's not so much the living out in Thailand that I want to focus on. It's pretty much how I was able to get here. And a lot of my older videos, you guys know that I always talk about investing so others can get options later in life, right? This was one of those options that I was able to build for myself because I was so, prudent in the earlier years, right? I was focused on investing, building my wealth, building my passive income, building my investment income, building my portfolio, right? So I want to talk about why you need to start investing as early as possible. It doesn't matter if it's today, hopefully it's tomorrow, and it doesn't matter, honestly, investing in what. It's just you got to get started investing, right? Because there's a million ways to make $1,000,000, especially when you're investing in either the stock market or real estate or even in crypto. But I want to talk about, anyways, I want to dial it back and talk about why you need to start investing. So earlier when I first started, right, I was 26 years old. I had no idea what investing even was. I didn't even know the concept of investing. I thought to be an investor, you needed to have, millions of dollars, be loaded with cash, right? I didn't know that you could just log into a brokerage account and then buy stocks. I had no frame of reference when it came to investing. So from basically 18 to 26, didn't know anything. Then, in 2016, that's when I took a job and left to basically work in a war zone. And that's when I started really hitting the books, started really learning about this personal finance stuff, real estate, investing in the stock market, and all that other good stuff, right? And really, I wanted to be a first generation millionaire. That was one of my goals, right? That was one part of the ambition. I wanted to be a first generation millionaire. Uh, and that's where this whole thing came from. And then later on, I learned about the terms, financial freedom, financial independence, all that stuff, right? I learned about it all. And I really wanted to build up my passive income, right? That was it. I learned that if you invest enough, and you build a kind of a secondary stream of income, your passive income, your investment income, your portfolio income, then eventually you can leave your job, right? I always had this notion that in order to leave the W-2 job, you had to, build a business of some sort, right? And then sell it and then exit, at a very high valuation. That was my initial kind of thoughts. So again, my dad never invested, right? My mom never invested. As a matter of fact, my dad was more of a businessman than he was anybody else. So I didn't pick up on this investing stuff, and I wish I did a lot sooner. But again, I just started investing, and it made sense to just dive right in. That's just the type of person I am. I don't need 100% of the information to make a decision. I just said, you know what? I will learn as I go. And I just little by little just kept reading books and then just kept taking action. Opened a brokerage account, signed up, put the app on my phone. And then, my first stock, honestly, that I purchased was Sprint. And I didn't even know why. Looking back, the reason why I bought Sprint was because there's a friend in the office who was talking about Sprint getting bought out by T-Mobile. And, he was talking about how it's going to, inflate the share price, and they're going to buy at a hefty valuation and so on and so forth. It could be easy, quick money. So I logged into my brokerage and put like $1,000 in the Sprint. Probably not the smartest or best idea at the time, right? And this again was in 2016, 2017, going into 2017. So that is basically how I got started, right? That was basically why I got started. And, my advice to anyone who's thinking about investing is start as early as possible, right? So you can get your money in the markets and you guys can start compounding your wealth. Okay. Whether that's through stocks, real estate, or cryptocurrency. Real estate is going to take a little more money, definitely a lot more money up front, especially depending on what you're going to do. In real estate, there's 100 different ways to make money. Rental properties, Airbnb, wholesaling. You can invest your money into real estate syndications. You can invest your money into funds. You can invest into REITs, right? There's 100 different ways. In the stock market, you can buy something as simple as like an S&P 500 index, right? And I know that, for those who do know, I know that's not the sexiest thing to hear. Investing shouldn't be sexy, right? It shouldn't be cool. It shouldn't be fast, none of that. When you're investing for a long-term period, right? That's the mindset. That's the mindset you need to have. You're investing for the long term. Now, you could be a trader as well, right? You can trade stocks, but that was, never my thing. I just never really got into trading. Maybe one day in the future, but I just never really was interested, right? And the times I did dip my toe into trading was the times I lost big amounts of money. I'm talking 5,000, almost 10,000. One was 5,000 on a crypto coin, another 5,000 on another crypto coin, and then another $9,000 on a hype momentum stock. Never again. Those were enough lessons learned that I would never ever trade again, based on FOMO, based on based on listening to friends. So let me scale it back a bit. Let me digress. So again, we're talking about why you should start investing, right? Again, for me at the very beginning, I had no real direction. Didn't really know what I wanted to do. And so what I started doing, and really getting into was, and this will sound cheesy, but setting goals, setting financial goals, right? What did I really, when I learned how to actually do it and do it right, that is when everything for me skyrocketed, right? That's when my wealth skyrocketed. I became laser focused. I knew exactly what I wanted to do. So my original plan, especially with real estate, was that I was going to buy one house a year, right? The financial goal was $1 million, right? I wanted to reach $1 million. And I could do that with real estate. I could buy 10 $100,000 homes over 10 years at $25,000 down payments each. So by the end, I'd only use about $250,000 over the span of 10 years. And I would own $1 million worth of real estate, right? Producing cash flows of, maybe $5,000 a month, right? That was the goal. That's what I wanted. And lo and behold, my strategy changed. Some things didn't work out. I learned some better ways to do things and basically, exited, rental property investing. But again, that was my financial goal. And then what I did was just kind of work backwards, right? Work backwards. And that is pretty much, the rest is history, right? I learned how to properly invest in the stock market, how to build a portfolio, basically became a dividend investor. And, I invested into real estate, passively. So I invest primarily in like multifamily, multifamily apartment buildings. Think like 20, 50, 100 unit type apartment buildings. So that's where I put a lot of my money. And I'm just reading my notes here to keep me on track because I tend to go off on tangents. So let's go back to 2016, right? Let's go back to 2016. I'm reading a lot of these books, a lot of these personal finance books, right? And I really, as far early back as I think like 2014 or maybe 2015 is when I read Rich Dad Poor Dad. And I know there's some people out there that, it's an infamous book. You either love them or hate them, but that was the book that just started me on that path, right? That path of understanding assets versus liabilities. Up until that point, I didn't even know what those were, right? So it at least helped me build the foundation, right? I've read The Millionaire Next Door, and it didn't really inspire a whole lot of, it didn't inspire me, right? It was a lot of good information, but it didn't inspire me, and I didn't know what to do with it. It didn't make sense for me. Whereas Rich Dad Poor Dad, it was just, it was like inspirational, motivational. Maybe that's just the stuff that fueled me. Either way, two ways to get to the end of the rainbow, right? So started with that book, and then I just kept like really reading different books. Another book that came to mind is The Richest Man in Babylon by George S. Cleason. Now that is a fantastic book, right? It is a book on basically building wealth. And he's using parables. He's using like short stories to like tell you how to get there. It's a really great book. But I kept reading books, just kept reading books, reading books, and I was following just a couple different like people out there who had what I wanted, right? They had what I wanted, and I wanted to know how they got there, and that was pretty much how or what started me down that rabbit hole, right? There's investors who were millionaires just investing in the stock market. There was millionaires who were invested into real estate. There was investors who invested into businesses or who owned multiple businesses, right? And that's what kind of started me down that path, right? I wanted to have what they had. So I basically reverse engineered how they did it, right? And then just kind of put together a plan, right? A financial plan. And I'm telling you guys, when you learn how to actually set financial goals, it is such a game changer. It is a huge game changer because you now have the roadmap to get you from where you are now to get you to that outcome that you want, right? Uh, so I can't speak highly enough of actually setting realistic goals, actually sitting down with something as simple as like a pen and paper and just writing stuff out and then working through it step by step. It is not going to happen overnight. It's not going to happen in a week. It's not going to happen in a month. It will take a long time. For me, it took me almost 8 years to get to where I am today, right? Can you expedite it? Yeah, absolutely. And you can expedite it by hiring coaches, people who have what you want and you want to get there, right? That's what I did. I hired a commercial real estate coach, and I got the training. Understood how to purchase buildings and how to underwrite buildings and how to basically network. That's really what the training was, and it was not a cheap training either. It was a very expensive training. If you don't want to pay for those expensive trainings, then hit the books, watch the YouTube videos, watch the videos, whatever it is, listen to the podcasts, right? Listen to the podcast on Spotify. But that is what you can do to really level yourself up, right? Really level yourself up, especially for 2025. All right. So when did I actually feel ready to start investing? Right. That is a great question that I always, when should you start investing? When did you know you were ready? Honestly, I didn't, I'm the type of person who's just going to dive in with like half the information. I set up a brokerage, I installed it on my phone. I heard a hot tip about investing in Sprint, and boom, that's when I dumped $1,000 into it. Right. I had no idea what to invest in. I didn't even know what an S&P 500 index was, right? I knew of dividend investing, and I looked at these yields, and you're seeing like 2.1%, 1.3%. I'm like, what is this? Like, if I put in $10,000, how am I going to get rich off of, $130 a year? That makes no sense, right? But I didn't understand compounding effect. I didn't understand the snowball. I didn't understand any of that stuff, right? Or any of those other strategies. I didn't understand that stuff at the time. And usually that stuff comes, when you're looking for it, right? It comes at the right time. So anyways, I didn't know what I was doing. There was no right time for me. I just started doing it. I started taking small, consistent action. I started investing whatever I could. And little by little, I started learning. I started making some mistakes. I started learning new information. I just kept reading and watching videos, and I eventually started to all click for me. And that's exactly what happened. I went off like half the amount of information I needed to get started. I just got started. I think that's the biggest key, is you just getting started, right? You will make mistakes. And if you want to kind of skip those mistakes or miss those mistakes and not make as expensive as mistakes, then you need to educate, you need to talk, you need to network with people, you need to watch videos like this. It doesn't have to be me. It could be any other, finance tubers out there. Be very careful who you listen to, though. Please be very careful who you listen to. So once I started understanding the actual basics of stocks, and I still didn't even know what an ETF was or a mutual fund. That's just when I started putting my money in there. I'm just reading over my notes here. One of the key things I think that was actually very important building myself up to this point was making sure everything else before that was taken care of, right? I built up an emergency fund. I had paid off a good amount of my debt. I had student loan debt up in, I think it was like as high as like 20 something thousand. I didn't finish college. All right. Let me put that out there too. I never finished college. I've been to like probably 4 or 5 different colleges. I tried to, and as a matter of fact, I still don't even have my degree. Uh, and it was just, yeah, it's just not for me. I don't know. Maybe one day I'll go back. I'm 34 now. Maybe I'll try to go back and learn this, get a degree, but just, I don't know. I was never good at sitting in a classroom and listening to someone talk about things I didn't care about, right? That's just the type of person I am. I care deeply and passionately about, building wealth, investing, real estate, the stock market, mindset, personal finance, self development, professional development. I care deeply about those things, but when you're telling me about, I don't know, history of something, I don't really care. Or I remember I took a politics class, a U.S. politics class, didn't really care for it. I took an international politics class, really loved it. But anyways, I digress. I made sure everything was done before, right? All the steps leading up to that. I made sure I had, an emergency fund. I made sure I paid off a good chunk of my debt, and I made sure that, I was financially stable, right? That I was taken care of, because investing in the stock market can be risky. I knew that much, and I knew I could lose money. So I made sure everything else was taken care of. And I made sure I had a huge, huge, sizable cash position, right? I think I had somewhere like $10,000 to $15,000 in cash, and I didn't even know what to do with it. So I was like, let me do this stock market thing, right? So that's when I started investing into stocks, right? I dropped $1,000, but I made sure that even if I lost that $1,000, I was still financially secured, right? Uh, I could go on and on about this piece, specifically with mindset, but I'm going to kind of keep it short because I don't want to bore you guys to death, right? Mindset is probably the most important thing ever, right? And it's not some woo woo, magical fairy tale thing. Having the right mindset and developing that mindset was and is and still is one of the most critical things to building your wealth, because there will be some hard days. It's not just put your money into an S&P 500 index and call it a day, or put your money into QQQ and call it a day, right? I mean, that is it. That's probably like, a good portion of it, but you're going to have some bad days, and there's going to be everything in between the, putting your money into the ETF, right? Uh, you're going to have some down days. You're going to have some hard days. You're going to have to work, right? You're going to have to go through it. You're going to have to be in the trenches. You're going to have to be in the mud, you're going to have to be in the messy middle, right? There's going to be all that stuff. And mindset is really what is going to help you get from 0 to 1. Okay. From your, where you are currently, your current situation, to where you want to be. So that's when, I really put a lot of emphasis, or a lot of, self-development on mindset, because it was so important to actually investing. It really was, because when the pandemic happened, I saw my portfolio drop like 30,000, or excuse me, 30%, right? 30%. I had lost actually upwards of $30,000, right? Right off the bat, within a week and a half, I think I was down $30,000. But because I had the mindset and the education, the financial literacy, I made sure to stay invested, keep dollar cost averaging, and just, I knew the background on my investments, right? Specifically in the S&P 500. So I already knew that, since 1900 something, 1902 or something like that, the stock market has historically produced about 10%, 7 to 10% when adjusted for inflation. So I know that this was a buying opportunity. But try try maintaining a positive mindset and a for sureness about your investment strategy when you lose $30,000, right? Just try it for yourself. So, I started, and again, I go back to the sprint story. I started, right? I had enough information to be dangerous. So I started. I had a start now type of mindset. It was like, hey, start now, figure it out later. Yes, I already knew and accepted I would make some mistakes. So I just started. And lo and behold, many years later, I'm here, in Thailand, living my passion, living my best life, living what I get to wake up every day, have my coffee, take my time, right? Get to my desk, and I get to make YouTube videos, right? About topics that I care about. And it's because I was able to build enough financial wealth, right? Again, wealth in stocks, real estate, not so much crypto, but I do have a little bit of tiny crypto. And again, you're gonna win. You're gonna get some early wins when you start, and that's what's gonna keep you going. That's what's gonna keep you motivated. That's what's gonna keep you, your eye on the prize, right? Hopefully, you have your goals all set out, and you're locked in. You're dialed in. You're moving forward. So you're gonna get those early successes, and it's going to fuel you. It's going to keep you motivated. You're gonna keep going. You're gonna keep investing. You're gonna build those little tiny habits that's going to help you propel, right? I wish I had the graph, but there's a graph out there. Maybe I'll put it in this video somewhere as like B-roll or something. But they say that your habits help you achieve your wealth, right? Building those habits is going to help you. If you have the habits to handle like $10, cool. Then try building the habits to manage $100, right? And then add another zero. Build the habits to manage $1,000. Build the habits to manage $10,000, build the habits to manage $100,000, and then build the habits to manage $1 million, right? You'll find vastly different habits for each of those levels. And if you want to level up, you need to build those habits. So again, this is why I have to keep looking at my outline because I keep going off on these tangents. But anyways, that will be it for this video, guys. Hope you guys get some tremendous value from this stuff. Please let me know down below in the comments, if you guys have any questions that I could explore, any topics that I could explore for you. I kind of like this format. I'm trying something else, just experimenting with the channel versus, always doing, kind of like educational content. I think I'll do a little bit of monologuing here and there, and kind of just give some of my own experience, some of my own insights into investing and building your wealth. So anyways, that'll do it for this video, guys. I'll see you guys in the next